Okay, let's have a look on this front with another example with the FTSE. And the example here is a typical problem many of us face. We're looking at it having done this, and what we're asking ourselves is, shall we, shan't we? Shall we get in, shan't we? The arguments against getting in, it's been very choppy recently. Also, that we're not looking at a divergence as such, but we are looking at the MACD moving from oversold territory, breaking its signal line, and we're looking at the stochastic oscillator moving quite nicely upwards. And so we might say to ourselves, okay, look, tell you what, enter if it makes a high above that point, stop loss quite tight down here with a target. Well, if that's our potential loss, which is about 60 points, then we need to get up to about 44.60, 44.70 at least. Maybe it's £100 a point, I don't know, on 70 points, 7 grand. Or, too rich for our blood, maybe £10 a point, 700 quid instead. So what happens as we move forward? Well, the very next day we do indeed get the buy signal, and the MACD does move up and the stochastic does what it's supposed to do. What about after that? Well, hey, there she flies. Not only did we get the entry signal here, but fast forwarding, look at the strength of that MACD rise, and the price not only exceeded our target, but kept on going up until this warning point. Why is that a warning point? Well, because for the first time the MACD has gone a little bit lower, the stochastic has gone to its lowest point, it's gone downwards from an oversold territory, has broken below the 80-point mark, it's gone below the dotted lines there, which are its %D, which also suggests a sell signal, and we've got this pattern here where we haven't made a new high on this day, and the new high we made here, we didn't close anywhere near it, we closed midway here. Several things to do. We can either say the very next morning we will exit half or all the position if it goes below that low point, because we're getting very anxious. We have, after all, exceeded our profit target. What does happen? Well, if we move to the fast forward, indeed that is exactly what does happen. It does indeed move below that low. The warnings were true, and we get out. Now, let's say we didn't manage to get out that day. We're on holiday or whatever. Well, okay, we were lucky. We got a bit of a reprieve because things moved up a bit before they started moving lower again. Incidentally, on the psychology part, what's happened there? Well, the sellers have come in, they've pushed it lower, and the next day the buyers have come in, caught them by surprise, and tried to resume this rally. Because at this stage, people didn't know whether this is just a blip and it's going to do this, or whether this is actually like this, and this bar is the blip, i.e. the little short move, and it's going to do this. Do you see what I mean? You don't know at that point whether it's going to be this, or whether it's actually this bit that's the blip and it's going to be this instead. And that's the point, of course, where we have the greatest difficulty in deciding what to do. Well, we didn't, because we had the indicators, and that's why we look at indicators, to help us and tell us that the tide has turned. We don't want to stay in to that at all. In the next chapter, we'll look at yet another example.